Agent asked me, why do I think IULs are a scam? Great question. We're going to talk about it in this video, so make sure you take notes. First and foremost, they're an option for a reason. We all took the same test. So I don't believe that there are bad products, but I do believe that there are bad fit support products. IULs become a scam when the agent who's selling it does not sell it the right way. What do I mean by that? IULs are not for everybody. Yet there are many agents on social media that sell it like it's for everybody. It's the most amazing thing since sliced bread. They're selling to people who don't qualify for it. They are marking up the death benefit just to focus on death benefit and not the cash value component. Not overfunding it. They're funding it at target, below target, so they can make the most commission off of it, which then will lead to that policy to imploding in the future. And a lot of the times, the agents who are selling it, they're new in the industry. Their upline didn't really train them. Their upline is commission breath. Fortunately, this is probably about 85% of IULs that are sold in the marketplace today. I'm going to explain how IULs are not a scam when they're done right. It has to have three things. It has to be properly structured, funded, and maintained. When you get a cash value IUL, you want to focus on overfunding your policy. You want the minimum amount of death benefit possible, so most of the money you put inside of this policy is going towards the cash value. Well, why don't you just buy term and invest the difference? Thought that some people may want their money to compound over time and they're guaranteed to never lose it. Maybe the stock market can't do that. And so it's an option for them to grow their money in a different way that's not meant to compete with the stock market, but instead actually be linked to the stock market. Well, the cost of insurance goes up every year. But then there's this thing called self-insurance, which basically what happens is your cash value starts to grow and compound over time, and it gets within a certain percentage of your death benefit, and that's what we call self-insurance, which basically means that, let's hypothetically say you've got $50,000 of cash value in your policy and your death benefit is $100,000. You would be thinking, well, you're paying for $100,000 of death benefit and it increases year over year. No, you're actually in fact paying $50,000 for life insurance and your cash value is covering the other $50,000. That's what we call self-insurance. And actually, when these policies are done correctly over time, when you have it long term, it can be as cheap as 1%. And let's not pretend like these other accounts that people put their money into don't have fees. These policies are extremely expensive. I agree, they're the most expensive the first 10 years, and a lot of these expenses start to fall off the longer that you have the policy. IULs become a scam when the agent who's selling it does a bogus job, they don't know what they're doing, or they're too focused on their commission. Hope this video helped. Comment your thoughts below. Hit that follow as always. Let's go. Sheesh.